thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss mortgage rates and what's impacting them on a daily basis. What might come something from the economic calendar, it might come from headline news or geopolitical items or combination. But it can really get confusing out there if the market sentiment changes. And now good news is bad news, and vice versa. And people who are just kind of watching along may not understand what's going on here and might be scratching their heads as to why is this doing this. So we try to get into the thoughts and minds, what's going on out there, what's going on, what we hear in the markets, and try to pass that information along to you folks. That way you guys can make a better decision for yourselves if you're looking to refinance or purchase, or if you guys are in the industry, just kind of give you some what's going on in the industry news, so to speak. So hopefully this will give you the information you're seeking. If you guys got questions about it, please reach out. We're here to help you guys out. And if you, a little bit about myself, as I am a loan officer, I do work with a national lender, so we do loans in all 50 states. If we could be of any service in terms of refinance or purchase, please reach out. We'd love to be able to talk to you how we can help you guys out. But again, we're here as a resource as well. We'd like to be able to answer any questions you guys might have. So please, again, feel free to reach out. So without further ado, we'll jump right into it. In terms of economic calendar, this week is going to be relatively light, but there is one heavy impact report that'll come in on Friday, and that is the CPI report, because, of course, the hot topic of it's been for a while is inflation. So that'll give us some information. So like here's for the week, this week. So Tuesday, for the most part, is pretty dead. We don't really have anything there. Wednesday, of course, we get the weekly MBA report, but we also get some wholesale inventory. Again, very minor. Thursday, we get the ECBs will have their statement, and regular jobless claims we get every week. And then Friday, of course, will be the big one, as I mentioned, with the CPI report and consumer sentiment here. So that Friday will be, for the most part, that could have an impact with markets. For the most part, the markets will be taking its cue from stocks or what we see on headline news or geopolitical items that might come up relatively. So this week, in terms of economic data having impact, again, Friday seems to be the only day in that regards here. Today, again, stocks are up today. They are kind of taking its cue. Analysts have been kind of looking at the rate hikes in there, how it's going to potentially hold off or bring inflation down. They're kind of looking at the Fed policies, so we'll see how that transpires. There's a lot of debates out there as to how long it might last, inflation. So a lot of different things out there. They're also kind of looking at the possibility of lifting some sanctions out there to help bring some of the costs lower. Now, how much of an impact that have, I'm not really certain. For the most part, prior to when we started seeing the rise of inflation, it didn't really seem to impact our pricing here so much. So I don't know if that's going to make a difference or not. So going forward, let's take a look here. What's going on with the mortgage-backed securities or mortgage rates? We'll bring this up here. We're down about 53 basis points. So what that primarily means is every basis point is basically a point in the term. So like 50 basis points in this case will be half a point, or 100 basis points will be 1 point in what cost for that rate. So right now that half a point, that no point loan from Friday would be about a half a point today for the most part. And right now we're kind of launching underneath the 25-day moving average. So we passed it right around looks like middle of May, around the 18th of May. So when we finally kind of crossed over. So the volatility here, we have some trading opened up, so right around the 5:30 mark at the East Coast time, and it kind of brought it in here. And then we've had some right around 9:30ish. Corporate bonds started jumping in there, so we've been kind of competing with the corporate bonds in terms of purchases there, and that's what's kind of probably exacerbating our losses for the day. The corporate bonds were, people are buying those versus mortgage-backed securities here. And then, of course, treasuries, as you can see here, spiked back above the 3% mark at 3.03, as we saw back around the early part of May here, around the 9th. So we'll have to kind of watch this to see if this is short-lived or if this will continue this trend here or not. So Last but not least, we'll take a look at the average rates. Again, these are delayed a day, so these will be based off of Friday's results, and they are conforming limit. So we'll look at the 30-year fix is at 5.44, and the 15-year is at 4.79%. So if you guys would like a rate quote, please reach out. We're here to help you guys out. We'll be more than happy to provide that for you guys. I hope you guys have a great rest of your day. If you guys like these videos, please help us out and smash that like button, share. Greatly would appreciate the help with the channel. You guys, again, have a great, wonderful day, and we're here for you guys if you need us. Thank you very much. We'll look forward to see you guys in tomorrow's video. Bye-bye.